Hello everybody, this is Ray, and today we have a really exciting show for you with some minor technical difficulties that were somewhat major, but I think we made them minor for you. So we have Nick Bailey on the show, who's RE/MAX Chief Customer Officer. He'll be joining us later. Plus we have Frank Garay of the National Real Estate Post. He's going to update us about lending and what's going on with all the COVID response and how that's happening. So I just wanted to put this little intro here to let you know, bear with us in the beginning of the show. For some reason, BeLive cut out and totally cut out all the audio. So we very quickly switched over to Zoom, which you will see through the magic of editing. But I wanted to explain that so that you knew why we couldn't display comments towards the end of the show, and also why some of the audio and some of the video looked a little different. So thanks for bearing with us this week. Apparently, it was the increase in internet traffic from all of us being home and working from home due to the COVID-19 virus. So even the Bearded Men of Real Estate was not completely untouched by this event. So thanks so much for watching the show, and we really appreciate it every time you share it.
What? Did you just give away? I gave it up too early. Spoiler alert. We have a very special guest on today's show, but if you're watching this, please comment so that we know that you're going to, that we can see your comment. I'm looking here. Chris Murray commented, he said, "What a show." So he's pumped. Why do you think he's so pumped about this show?
Because I'm pumped, or because we're pumped.
There's a little real estate balloon by his head. What is that?
I don't know. I don't know what that, I don't even know who Chris is, so.
So we do have a very special show. We're going to get into the headlines. We've got a ton of stuff to talk about. It was almost like last week, there was a pause and it was all like coronavirus stuff. And then they were like, what's going to happen? What's going to happen? And now it's like, well, here's what is happening. So we have a ton of news stories to get to on today's show. Melissa Marr says, I am so excited. She's joining us live. Chris Murray said he's pumped. Chris Murray said, Robert Little said, Chris Murray told me this was worth watching. He's absolutely right, Robert Little. And here's one of the reasons why. We have a very special guest in studio with us. I'm going to bring him up. This is Mr. Nick Bailey. And some of you might recognize Nick from a little story we did about 1.5 years ago with this guy that was at Century 21 that was making the decision to be with his family and move to Colorado. And we were like, wow, that's really cool and refreshing. Really cool. We even read his entire letter on the air to you guys. Well, he is with us because he is still in Denver, right? You're still in Colorado.
I am. And I actually never moved. That's what people thought. I relocated and moved back. I actually was in Denver the whole time, and that was the issue. I was living in Denver and never in Denver.
There you go. So he was living in Denver, never in Denver, which is tough, especially for a family man. So now he is the Chief Customer Officer, CCO, for RE/MAX. So welcome to the show.
Hey, thanks. I appreciate you inviting me. This is great.
See, Robert Little is already impressed. He said Nick is the man. So I guess Chris Murray was right, Robert.
And I know who Chris Murray is if you don't. So
there you go. He said, Chris Murray said, is very high speed internet on quarantine. It's a bit blotchy. Yeah. So I have this banner up above where we go live. It says high loads at service providers may cause performance issues. Our engineers are on it. So BeLive is having an issue with all the people at home and on Zoom and on all the happy hours. There's just a lot of internet traffic. And so I think that is causing a general overload, and they're trying to figure out how to shoot more video through. So even if the video is not perfect, hopefully you guys can hear the audio. We will also be putting this on YouTube, and then you can hear the audio on that too. Dan Mack is already calling you out, Nick. He said no beard.
Well, mine is definitely, if I let it go, is not as cool, for sure. I don't consider myself old yet, but I think I am, and in denial because it's white on the front. So
nice.
Yeah,
you're becoming Santa.
Yeah, mine white's around the side, but there's also some sneaking in there, but I don't mind it. And I'd like to say that I have a perfectly trimmed, groomed beard every week, but nah, it's not the coronavirus's fault. It's just, this is my beard.
But here's my question for you. How long would it take to go from this to that for you?
Yeah.
For me, so people ask me all the time, how long have you had your beard? Like they think it's taken this long to get here. I keep it here. Although now I've decided everything's just growing. I shave my sides. I have like a mohawk thing going on, but that's going, my beard's going. So for me, it would probably take a good 6 months to fill into this.
6 months. Okay.
Yeah. I just trimmed mine recently. Trimmed it up for you, Nick. So this was it probably would take me about 4 or 5 months probably to get back to here. Once you go So what I did, but this is mildly interesting, I guess I'll share. Whenever I started growing a beard in real estate, it was very controversial. And
Really?
when I restarted in real estate, so I restarted in 2013. I was licensed through the crash, and then we all did other stuff. Restarted in 2013, and I was pretty much clean shaven, pretty baby face, wore the suit. I did everything all the old guys in real estate told me to, because I feel like you kind of have to earn the right to be different. You can't just start something and say, hey, I'm going to shake it up. Look at me with my beard and mohawk as a new agent. That's not going to work. So I was clean shaven, and then slowly, as I got more business, my beard started getting bigger. And I would keep it like trimmed for a while as it all started to fill in. So a mistake that a lot of new beard growers make is that they just let it go. It gets all real stringy. You kind of have to keep trimming it up and letting it come in slowly. So over a year or two, it got pretty big. And now it's kind of like a calling card. It's actually on my card. I have a little drawing of my face with the beard on my card because that's what the people recognize.
Now you're known
far
for
less
it. Well,
controversial now.
I think if I think back, I don't think I've ever been more than 6 days in my entire life without shaving. So I have no concept of what that's like.
My dad, not to get too off topic here, but my dad.
I think we already have.
Yeah.
Well, it is a Beardy Minute real estate show. It's still in the
This
show.
is like live true confessions or
Yeah.
Let's see the Inman headlines now.
But my dad, so his entire life, he's 76 now, but his entire life, every single day he shaves in the morning and then once at night. He's never had a beard. I think once when he was 19, he had a goatee or something, but as long as I've been alive, never. So probably about 10 years ago, because I've had this for about 15. I made him, I'm like, you got to grow a beard. I got to see it once.
Yeah.
And dude, he let that thing go in 5 days. It just went poof. I mean, it went crazy. He hated it and all that stuff, but it was pretty impressive to see that man grow a beard.
Wow.
I don't think my kids would recognize me if I cut it.
No, not at all.
There are some good videos some good YouTube videos on that dads will shave and their kids are scared of them. They don't know who they are.
Yeah. A good friend of mine likes to do that. He grows his beard out and he's a great beard, similar to Ray's, and then he shaves it and these kids are all, oh.
Dominique Marquez checking in. She said, good morning, gentlemen. Great to see Nick on. She also says, yes, we're off topic. Okay. We'll get back on topic here shortly. Melissa Mara shares some interesting information that I did not know. It's just like a girl growing their hair long. Apparently you still have to kind of trim it to be longer.
There you go.
So there you go. All right, so we'll have more with Nick that's less about the beard, way more about the real estate industry as soon as we cover some of these headlines. So I'll drop Nick down into the host. If you have questions for Nick, we'd appreciate it if you would comment and ask them, because I could bring up those questions during the portion of the show while he's on. And also, if you're watching the show, please preparing.
Mm-hmm.
You're live. We're live.
We're live? Okay. So anyway, hi.
Hello. All right.
Yeah.
So let's skip the part about what Be More is all about, because I think we know. Let's skip the part about when we met, because we'll just have to tell people later. And let's get right into these headlines so that we can finally get to our guest, who's Nick Bailey. If you didn't catch the first part of the show, we have a very special guest on the program who is the RE/MAX Chief Customer Officer. So we'll talk about more of how he got into that. We will talk about how he got into the real estate, and then we will get some of his opinions about some of these real estate articles that we dive into. So without further delay, technology or otherwise, Dan, are you ready to get into the show?
Yes. You ready?
Let's go. There we go.
There you go. And Nick, those are the awesome sound effects that we were talking about.
The awesome sound effects. All right. So for the first article, we're going to talk about weekly mortgage applications. They sink nearly 18% as coronavirus causes home buyers to back away. So this article is from MSM or CNBC. It says that customers are losing confidence in the spring housing market due to the coronavirus, and housing rates aren't helping. Well, we'll get into that. Really? Are they not helping, or is that a little bit headliney? There was 17.9% drop in mortgage applications this week, according to the Mortgage Bankers Association seasonally adjusted index. So let's recap the details that are involved with this number. The average rate is 3.49%. Now that rate is all the way up from 3.47%. So there's a 0.2% change in rate. So I don't think you could attribute much of the lower applications to that. Applications to refi were down 19%, though still higher than a year ago by 144%. So there's still a lot more refinance activity.
So even with a 19% drop, is it month over month or week over week? Week over week.
The 19% drop was weekly. Yep.
Even with a 19% drop.
Correct. 144% higher for the year. All right. So the applications to purchase, which is what a lot of the viewers are concerned about, because a lot of real estate agents watch the show, it was down 12% for the week and 33%, which is year over year. Now that is a notable dip from last week's numbers, which involved a 24% drop year over year. So here's the quote from Joel Kahn. He's the Associate Vice President of Economic and Industry Forecasting. He said, given the ongoing rate volatility along with the consistent lack of liquidity in certain sectors, the mortgage-backed securities market, we expect to see continued weekly swings in refinance activity. With much less liquidity and tighter credit in the jumbo market, the average loan size declined and mortgage rates for jumbo loans increased to a high last seen in January.
Yeah, and I've had a lot of recent leads come in. You know, they get on there through looking at homes and stuff, but then what their real goal is to get to a lender and talk about a refinance. So, you know, people are sitting at home and like, well, if their thoughts have changed on it, well, I don't want to sell, so I'm going to see if I can refi.
Yeah, let me see if I can pull up some of the comments. Let's see.
Can you?
No, I was trying to. I was really trying hard to. I am getting notified of your comments, so I'll just have to read them off manually, unfortunately. So,
yeah.
Yep.
Well, as far as outside of high raise and updating us on how to use Zoom. By the way, I'm here too, guys. Thanks. Just kidding. Melissa said in regards to the refis and stuff that's down, but not as bad as she thought it would be, to be honest.
Yep.
We ready for the next one?
Yep.
All right. So the DocuSign CEO says the company has not yet seen a slowdown in activity among real estate agents. So this is where I'd love to hear you guys, because I have yet in that title, right? DocuSign CEO Dan Springer said Tuesday the company has not noticed a decline in activity among its clients in the real estate industry, despite the economic shock from the coronavirus. And this is an article from CNBC. So a quote from the man himself: real estate is an interesting one because while a lot of people are concerned there's going to be a slowdown, we haven't yet seen that at DocuSign. He told CNBC's Fast Money. Now, while Springer said the advent of widespread work from home policies is generally good for companies like DocuSign, he noted that the company is not immune to the broader macroeconomic uncertainty. Another quote from him: we have almost 600,000 customers, from the smallest businesses up to the largest Fortune 500 companies. And we've seen that across those, there is more demand for volumes. So, and I think, Ray, on this one, this is only going to go up from then. There's going to be more non-in-person signings.
Yeah, I mean, with evolving technology, Arkansas is one that kind of lags behind in this, actually, because we don't allow the digital notary, and that's a big issue that has to be done. If you want people to continue to close without signing paperwork in person, you have to have those security things in place. There are a lot of states now that are going through emergency procedures. Arkansas is one of those, to where now the notary can do a video conference to physically watch the person sign the document, and then they can notarize it. Right. So that has been approved. I think that will continue to evolve. Somebody asked me the other day, is blockchain going to help? I think so, but that technology is still a couple of years away. I think there are other ways that they will continue to try to do it and secure this. But it is something that a lot of states are going to have to look at. And I think in the long run, like once we look back 5 years from now to the old COVID virus, I think we'll see some advances in technology through this time that's actually going to help our business a lot moving forward. And I think the digital signings are going to be one of them. Now, the other thing I wanted to note that I think you alluded to was that they said they haven't seen a slowdown in the business. And that's probably true, because what we do as real estate agents are always delayed 60 to 90 days, at least 30 days. So real estate closings are a lagging indicator. When I looked at the numbers for our area for the first quarter, there wasn't much difference, and it was actually up compared to the quarter a year ago. But what is currently under contract? 40% of our current market is under contract, which is great. But when you look at what is currently active, the active listings are down 20% from January. Now that is usually inversed, right? Usually during this time of the year, the active listings are a lot higher as people are putting their property.
Because we're in spring now.
Right. So I'm curious to know in the coming weeks what that's going to look like, as we've seen a national slowdown in showings of 25%. We have seen online inquiries increase 35%. So as that starts to happen, the question, and one of the questions I want to talk to Nick about is I want him to look for us into the crystal ball and tell us what he thinks is going to happen to real estate agents.
And that's what I wanted to ask. So there's a comment from Eric Vasquez, one of our close friends. No, as agents are transitioning their business to a digital online platform, DocuSign and .loop are going to be more in need. New York is now allowed to notarize via visual means. So that's what I wanted to, how can you can't, no, my phone's not vibrating. That's what I want to ask, because we have pretty much everything we can do via DocuSign or zip forms or whatever. We can do digital signatures, but I'm curious to see, are they going to allow it to go, emergency wise? Like, all right, during this time, like you said, Ray, we'll allow it, but then we're going to go back to how it was, and we have to do in-person signings.
It's going to be really hard to revert such a convenient tool.
I know. And because remember when DocuSign first came out, I mean, it first started gaining when, I've been in the business since 2011 and 12, and it was not acceptable then. And then they started like, okay, well, you can sign an offer with it. Okay, well, and then now it's pretty much everything except for the stuff they need wet signatures on, loan docs at the end for California.
So speaking of people paying mortgage, speaking of people signing mortgage documents and paying their mortgage, let's get into the next article where you have a request to delay mortgage payments. They jumped nearly 2,000% as borrowers seek relief during the coronavirus outbreak. So check out this news story. This again is from CNBC. Let me spotlight it for you there.
We have a lot to this because we have a couple stories on this. So I have a lot of questions around this one. I would love to get Nick's feedback on this one specifically.
Yeah. So the Mortgage Bankers Association said that the request to delay mortgage payments grew by 1,270% from March 2nd to March 16th, and another 1,896% from March 16 to March 30. This is on the heels of the CARES Act, which was signed March 27th and allows borrowers with government-backed mortgages to delay at least 90 days to 1 year's worth of payments. Now, notice I said delay. The balance due would be remitted either at the end of the loan term or in a structured modification plan, according to CNBC. Forbearance grew from 0.25% of the total servicing portfolios to 2.66%. So you have a lot more people requesting forbearance and a lot more people, it looks like, going to be relying on the forbearance moving forward with a 2,000% increase. One has to wonder if they know exactly what they're getting into, or if this is something that they saw somebody share on Facebook, so they called their mortgage company and requested it.
Right.
We have talked about this. Go ahead.
Well, they have to grant this. It's by law now. So, and like I said, we have more on it. So I'm wondering exactly that, Ray. And I do believe that it is our job to get this as realtors. I got to say realtors, sorry. And real estate professionals, you got to get the word out there that this is a delay up to 90 days. And then there's the story that I have coming up that's going to break it down a little bit farther, but it's a delay. It's not, I'm not paying for, 3 months and then I'm good.
Right.
So you got to get the information out there. You got to get past the headlines. You want to hit the next one? If only
David Fresco says most people ask for it even if they didn't need it. We actually got an email from ours saying that if you need it, you can request it. So we just called to see, like, what do they tell you? And they were basically like, yeah, you can miss a month, no big deal. But we were like, oh, we're just going to keep paying because I don't want something to come bite me in the rear at the end.
Yeah. And I just paid mine. So, we'll see. But it's interesting to me to see what people will do and why they're going to do it. Do they have to, or they're like, well, I don't have to pay, so I'm good.
Yep, exactly.
But then it's going to be added on somewhere, right?
Yep.
All right, you want to hit the next one?
Yeah, go ahead.
All right. Mr. Cooper, speaking of the last story, so this is specifically Mr. Cooper places 86,000 customers on forbearance plans. Mr. Cooper released its initial numbers on how it's serving its customers during the COVID-19 pandemic, announcing it has placed more than 86,000 customers on forbearance plans. This article is from Housing Wire, so if you want to see, you can go to Housing Wire. This is approximately 2.5% of the servicers' total customers. The new data comes just a week after the president signed the CARES Act, which dictates that borrowers with federally backed mortgages can receive as many as 12 months of forbearance. So imagine not paying for a year, then they're like, cool, now pay the year back. Everything's cool, now pay it back. This is a quote, because the full extent of the virus and the associated economic impact cannot yet be quantified, we are proactively working with government, agency, and financing partners to identify and secure robust financing alternatives and clarify forbearance and modification policies with the goal of ensuring that our customers are served even in an extreme downside scenario. Now, that is the Vice Chairman and Chief Financial Officer, Chris Marshall. So if you're hanging with Mr. Cooper, they are doing their best to help where they can.
There you go. We thought about making the joke M.R. Cooper and Dr. Horton, but we won't do that joke. So Melissa Morris,
funny for Ray and I.
Yeah, Melissa Morris said, but I feel like the majority of people don't understand how forbearance works. She's paid up 2 months ahead. That's good. Eric said the issue is forbearance amounts will be divided and distributed on your 2021 payments. Yes, in some cases. They did say that it was added back to the end of the loan in some cases. So that's an interesting, it's probably up to the servicer, but that would be, I don't know if they're talking about at the end of the loan, meaning the forbearance loan. In other words, maybe they're looking at the time that you don't pay, like receiving a loan with no interest or anything. Like, I don't know if they're looking at that where you pay at the end, because I have heard that if you take off 6 months, then you owe 7 months at the end of 7 months, right? Now, I also have heard that some people allowing you to essentially refinance that forbearance and to wrap it into your payment for a certain period of time over that. And I have also heard, especially in some commercial applications, of people adding like rent payments to the back of their rent, to the back of their lease. So I don't know exactly which way that's going to work, but I think there's a lot of options there, and people need to know what their servicer is going to provide before trying to ask for this stuff.
Yeah, so we highly recommend. I mean, it's good that this stuff is going on and that this is available, but you need to ask your whoever holds your note and whoever's servicing your loan. You need to ask them what it entails on the back end, after the forbearance period is up.
Yeah, for sure. Don't go into this stuff blind. Okay, so next we have this is one of those gotcha headlines, which you guys know that we love the gotcha headlines.
Wait, hold on.
Go ahead.
Fresquez says government is giving you a shovel to dig a deep hole.
Yeah, good point. That's a good quote. Okay, so let's look at this one. It's the headline makes real estate people sound terrible. Coronavirus crisis is, quote, not an excuse. Real estate CEO says those who can afford should pay their rent. Ooh, that sounds like, that's pretty bad.
Mm-hmm.
In reality, when you read the rest of this article, this is from Jeff Blau, the CEO of one of the nation's largest real estate developers, related companies. And he said that and the reason why they're making news is because he said this, but he said the COVID-19 is not an excuse for rent, but as you write, the less exciting headline is that Jeff said that the people who can pay need to pay. And he goes on to say that the landlords who need to help out those who can't, and the banks need to help out those landlords that are hurt by the people who couldn't pay rent. Now, an example that he's using in actuality of this happening is a case in Germany when Adidas sent form letters to all of the landlords that they currently lease from that said they're not going to pay the rent or can't pay the rent because of the COVID-19 stuff. Well, Adidas was shamed for sending out the letters, and they have since rescinded the request and have paid their rent. So his point was, you have companies that are in the position to continue to pay their rent, and they shouldn't look at this as an opportunity not to pay, because that would cause undue hardship on rents as a whole. Now, Jeff said that they've collected over 80% of their rents from residential and over 95% of their rents from commercial companies so far. So it looks like they're on track to still do pretty good. So there you go. Look a little bit past the headlines whenever you see something about the evil real estate guy saying the crisis is not an excuse for paying rent, and figure out what they're actually saying. It's I would tend to agree with him. What about you?
Same. I mean, if you're new to the show, if you're a new viewer, first of all, if you're a new viewer, comment along with us. We love the comments. The show is built on the comments. We love the interaction. But if you're new to the show, a lot of the reason Ray and I get along so well is because we both like to dig past headlines, because a lot of headlines are written nowadays to people see it and they go, well, cool, that's my new truth. And a lot of them, you got to get past them to read what's really going on, what was really said. And even if you can, watch a video of that person giving that quote, so get past it. But I mean, I hope that it is that way. If you can pay, I mentioned it, I think before we were on, but if you've always worked from home, you're still making your same income, pay your rent, pay your mortgage.
Yep. I concur.
Want to cruise into the next one?
Yeah, go ahead.
Coronavirus mortgage bailout. There's going to be complete chaos, says industry CEO. So a broad coalition of mortgage and finance industry leaders on Saturday sent a plea to federal regulators asking for a desperately needed cash to keep the mortgage system running during the coronavirus pandemic, as requests from borrowers for the federal mortgage forbearance program are pouring in at an alarming rate. The CARES Act, which seeks to, we've already covered it, it mandates that all borrowers with government-backed loans be allowed to delay at least 90 days of monthly payments, which we covered in the other article. But here's the next step, right? If people aren't paying their loans, which is now law, where the servicers still have to pay who are holding their loans, right? So Mr. Cooper, the largest non-bank servicer in the nation with close to 4 million mostly government-backed loans, has already granted more than 80,000 forbearances, and the requests keep flooding in. Jay Bray, which is a very fun name to say, he's Mr. Cooper's CEO, helped federal regulators set up the plan. Now, he said he was told there would be federal cash for servicers, but that part of the deal never made it to the final act. So that is very interesting. This is a quote from the man himself. "It's frankly frustrating and ridiculous that we do not have a solution in place," said Bray. "There's going to be complete chaos. We're the largest non-bank. We have a strong balance sheet, but for the industry as a whole, you're going to start seeing problems very soon." So interesting to see what's going to happen there.
Interesting note from Dave Fresquez. He said, "I'm really looking forward to them sunsetting credit bureaus. That's the only way to come out of this."
Ooh. He's always so good.
Good comments. All right, so I'll go ahead and get to is this our last? No, it's our next to last article. So
yeah,
I want to read this one straight from the company themselves. So bring this up, but we're going to talk about Redfin furloughing 41% of its employees and how and why they did it. I thought it was a really interesting rationale that they made. This also comes on the heels of an SEC filing that they said that they let go of 7% of their staff. So they let go of 7% of their staff and then furloughed 41%. Let me bring up this article so you guys can see it. And I'd love to hear your comments on this as well, if you're watching the show. All right, so big Redfin furlough. This is straight from their redfin.com/blog. 41% of our wonderful agents are leaving Redfin this Friday, together with the wonderful coordinators, recruiters, renovators, and others who supported those agents. That's a really weird way to say that, in my opinion. I mean,
so bright and so happy.
41% of our wonderful agents are leaving Redfin. The great majority will go on furlough until September 1st, with a transition bonus and healthcare benefits through the summer. But we're also asking some to leave for good, including new hires who hadn't met customer or completed their training before the offices closed a month ago. The people who build technology, they'll still be around with a 10 to 15% pay cut, it says. And we're also canceling these folks' bonuses for the year. So just an opinion, but when you're cutting someone's pay by 10 to 15%, you may not want to get folksy. Sorry.
Folksy.
So furloughed employees may get more unemployment insurance. So one of the big reasons they did this, and this is kind of what I want to get to, and we'll kind of leave it here. You can see more information at Redfin. You can also find the article that details this information or gives a summary of this information at Housing Wire. But it said, we're relieved that the people who have to leave Redfin will get some more support. We decided on the large-scale furlough because fewer people buying and selling homes. But another factor was the federal government's $600 weekly contribution for unemployment insurance. Of the field folks leaving, we estimate 75% in states that will allow them to earn more from unemployment insurance than from Redfin. So there you go. They can earn more from unemployment insurance than from Redfin.
So Chris Murray, again, I don't know who that guy is, but he's apparently with Remax. Oh, wait, I'm with Remax.
He said exactly.
He has the perfect headline and this week's first shade. So
yeah, he said he said headline: Redfin agents make more with unemployment than with Redfin. So there you go.
So Ray, we feel for these agents. We feel, but we talked about it here and there, but in different avenues. But we feel for these agents. Obviously, we don't want people to suffer and to have struggle through difficult times. But the Redfin model, how it's not designed like the company I may be with to push agents to be better and actually be full-time agents. So
and continuing
it's not
to
a surprise to me
in a time of tragedy to help people when they need it most.
Right.
I think we've said for a long time that there's going to be a great divide in the marketplace, and we need to get Nick in here so he could chime in on this stuff too. But we said for a long time that there's a great divide in the marketplace, and if the market tanks, you're going to see all those agents relying on the servicers and relying on the people that feed them leads and but they don't have the skills to maintain. Right. They will leave, because we saw this in 2008. It was much harsher then. I think it's going to be a lot less harsh now. But still, when you see these big companies employing a lot of people for salary to do our job, and then they're laying them off because they can't afford that anymore, that just goes to show you that what models work and what models don't work in hard times. If you can create a model that works only in the greatest of times, well, that's great. But as soon as there's a rough time, you're done. So.
Yeah. Well, Lisa makes a good comment, and many of them won't be eager to be recruited by a more traditional RE model. I don't truly believe they're in it to help people buy and sell homes. That's, I don't know everyone's motivation, but so we'll get Nick in a second. I just want to hit this last one very quickly because it is a bright spot, but I'm going to rip through it real fast here, Ray.
Okay.
Residential construction is a bright spot in jobs report, but more workers start to stay home. So this one is like a current, very, very current. So construction has been deemed essential by the federal government, but a growing number of residential construction workers are pulling back, worried about catching the coronavirus. In case you guys haven't heard, there's a pandemic called the coronavirus. While overall construction employment fell in March, according to the Bureau of Labor Statistics, residential construction added 2,000 jobs. It remains to be seen how long that will last. In its second weekly survey of residential home builders conducted from the 24th to the 31st of March, it found 64% of respondents cited problems with the willingness of workers and subcontractors to report to a construction site. That number was at 42%. So this is from so here we go. Let me just get to the end here. So this is a quote from Toby Bizzuto. He's the CEO of the Bizzuto Group. One of the benefits of construction is a lot of it is outside, and the men and women are very far apart. These are people that are accustomed to being in a risky workplace. They have followed the safety standards and updated protocol perhaps better than any of us, because in a sense, that is part of their DNA. But I'm really curious to see which way that 64% goes, because right now, I mean, that's a big number, but it's been deemed essential, so we need the workers there. But more and more people are saying, I want to stay home. So I'm curious to see how that plays out.
Yeah. And without further ado, let's go ahead and bring Nick up so he could comment on some of this. So I'm going to admit him to here, and we'll see exactly how this works.
We
Maybe.
will.
Maybe. So there he is.
So-
Yeah.
So, hey, Nick, we called you out on a lot of it. So go.
yeah.
Yeah,
Remember,
holy
did you
cow.
take notes? Just remember everything we said, okay?
Yeah, I had to dial you up on my mobile device. I was in the back, so I didn't hear the first half.
Oh, so you couldn't hear it. Wow. Okay.
No,
Well,
but
that's good to know
I
for
heard,
future
I
notice.
heard about 15 minutes of it.
So just so
actually
you know, guys, if you are using Zoom to go live, because I know a lot of the tools real estate agents are looking for, if you put someone in the, there's like a little waiting room that they have, the person can't hear you. So I didn't know that. So
Oh,
sorry about that, Nick.
geez.
So
That's all right.
we're super
Learning as
happy
we
that you're
go.
here and really,
Hey, we just got to be flexible, right? It's
super
cool. It's
thankful
good.
that you've actually hung out and waited through all the technical difficulties that we've had. So we really appreciate that. Before we get into some of the discussion about these hot topics, real quickly, tell us how you got into real estate.
Oh gosh, you're taking me way back, and I have 8 minutes. Okay, so for me, real estate just started as a fascination as a young kid, and I actually bought two commercial retail buildings when I was a junior in high school, and
Wow.
that was my forte in it, and it was pretty cool. One of the local hot pizza spots was my tenant, and it's kind of a dorky redhead kid that played the saxophone in band. All of a sudden,
So
being
did
the landlord to the cool pizza restaurant was
so
a
good.
good move in high school. Yeah. So anyway, that was my start to it. And then when I was headed to college, I looked at what staying on campus cost for one semester, and that was an FHA down payment on a house. So I bought a 4-bedroom house 2 blocks from the college, and rented 2 bedrooms in the basement for a couple of years until I could afford it on my own. And so that's kind of how I got started. And then I got licensed when I was 21, and my instructor said, you'll never get rich in real estate by commissions only. Buy a piece of real estate for every year you're licensed, and you'll develop income and wealth. And so for the first, it was good advice. And so for my first 5 years in the business, I had 5 properties, and then I ended up going the corporate gig. But anyway, got licensed broker, and I'm still a broker today, and sold some houses last summer, and so still in it.
Cool.
That's really
and
cool.
for a short time, you were with Century 21. For those of you, I'm just going to go briefly over it. You were with Remax for a while, then you went to Century 21, helped them do an amazing rebrand, by the way.
Absolutely.
Phenomenal job rebranding your competition just before you leave. And then, rejoins Remax, but this time is the Chief Customer Officer. So what do you do exactly with Remax right now?
Yeah, so my role is to lead the Remax brand throughout the globe, and to make sure that it is customer focused and with a growth minded approach. And so it encompasses a lot of components, but that's likely how I would sum it up.
Okay.
Yeah. And I can say, as a Remax agent, I'm not a big brand guy, but coming to Remax 6 months ago, I've loved everything about it. And what Nick said is extremely true. They make it so easy on us to have all the tools in place to just do what we do and then take it from there. So we appreciate you so much.
Yeah, well, thank you. I'm glad to hear that from one of our valued customers.
There you go. So as someone who is a C-level executive in a real estate firm that is worldwide, what do you think is going to happen once we come out of all this stuff? The kind of the crystal ball thoughts and moments. What's going to happen to real estate in general? And then you have all this real estate shakeup between the iBuyer programs and new agents and such. What is our industry going to look like whenever we get the all clear, hey, you can go outside again?
Yeah. Well, here's what I know first and foremost is most people know I was an executive at Zillow Group for several years before leading C21 and then coming back to Remax. And for a number of years, we have all heard with online and tools, et cetera, is the agent going to be relevant in the future? And I have said, I say it on stage all the time, I have for the past few years, that the agent is today and will be in my lifetime in this business the most important part of every transaction. And the unfortunate part of the new operational reality that we found all of ourselves in the last few weeks is that couldn't be more spot on, that right now buyers, sellers are relying on their trusted agent advisor. And I actually, with all these tools and Zoom and and e-signature and all the things, and I know you discussed a few of them. I had an agent actually ask me yesterday, do you think with us adapting all this new technology in our virtual work environments, that this is going to impact the role of the agent? And I thought that was a great question. And my response was, quite honestly, all of this technology existed before. And if we were really all honest with ourselves, more agents should have been adopting and using it.
Thank you.
Because you mentioned wet signatures, or is this going to change things? I think what this does is it forces even a lot of counties and states to record mortgages and deeds with an e-signature platform. And I don't think that we'll go backwards on that. But when everyone asks me, by the way, what's been the most revolutionary piece of technology since you've been an agent for 24 years, what is it? I was having a discussion with an industry leader just a few weeks ago. And you know what it is? E-signature.
Huh.
E-signature is likely the biggest innovation that has hit our business in the last 20 years. And now we're just shining a spotlight on it.
Yeah, I mean, we have these new, I don't know if it's nationwide yet, but we have these new COVID disclosures. And essentially before showing a home, we have to get them signed. You can send them to them through DocuSign, get them signed, and meet them at the house. You don't have to print anything. You can have it signed while you're having the conversation with them about, the process and all that stuff. It's absolutely amazing.
I want to bring up one
does,
commenter.
Though, is it does say that it doesn't make the trusted advisor role of the agent any less. It doesn't make it less than. It's like saying that we used to sign with a black pen and now we sign with a blue pen. Is the agent going to be less relevant? Now we're just doing it electronically. The role of the agent is not determined by the medium in which they deliver the services. It is the value that they bring to the transaction that is important and will continue to be important.
Very good. I love that. And one of the goals of our company is to always give more value than you're taking from the marketplace. And as long as you do that, you'll remain relevant, not only relevant, but premium in the marketplace. So I totally agree with you. I did want to mention one.
There's such high churn. There's such high churn in our business because I think many people get into the business for the wrong reason. And they view agents driving fancy cars and say, oh, wow, this is a get rich scheme. But they don't realize that you got to be genuine. You have to care about the fact that you're providing one of 3 essential items: food, clothing, shelter, and you're helping people with shelter. And when that's kind of the passion and the core, at your core, in addition to serving, then I think the income comes as a result.
Right.
So if you get into it just for the money, you're going to be out of it just as fast as you got into it.
That's good. I'm going to ask you about tips that you would give agents right now that are kind of managing the crisis. There's some that are sheltering in place and can't leave. There's some like us that still are essential and can kind of move around, kind of do what we need to on behalf of our clients. So that's the question that's coming. But before I get there, I want to highlight one comment from Nicole Rodriguez. Hi, Nick. Good to see you. I was one of your first high school students. How cool is that?
Oh my gosh. Are you kidding me? Nicole.
The Be More audience, far and wide.
Holy cow. That is awesome.
So, all right, threw you for a loop there, but back onto the topic. What advice would you give an agent that's sitting there that may not have all the funds and resources to outlast? They have to work or find a way to work now. What would you tell them to do?
Well, one, this reminds me of Jack Canfield, by the way. His success principles couldn't be more relevant than they are today. E plus R equals O. Event plus your response will equal the outcome. And the only part that we can control right now is our response. And you see responses all over the board. And people that blame the event, it's because they're uncomfortable with their current outcomes. And so you have to change your response. So I tell agents right now, by the way, don't clean up your closets, clean up your database.
Yes.
Go through and learn technology right now. Embrace some of these new things that are available to you, because people aren't going to stop buying and selling real estate. And the population, household formation is at one of its highest levels. Inventories are low, as you mentioned earlier. They've even gone lower because of the apprehension maybe of people putting houses on the market. And I believe that we'll see a decline, as you talked about, as a 30, 60, 90 day pendings will drop a little bit, but I believe we will see a short spike coming out of that. because of the pent-up demand. And so agents should be working with their buyers. They should be communicating on a daily basis. And now is not a time to sell, it's a time to support. And so by embracing video and reaching out, I would reach out to every single person in my database right now and say, Ray, how are you doing? Just checking in on you and your family, and be doing that on a regular basis.
That's good. Well, if you're with Remax right now watching our show, you've got to feel a lot better. Because with a dude like Nick at the helm, man, that's some solid advice, and the advice that we've been preaching to our own agents and that I've been doing myself. So I think without a doubt, you guys are headed on the right direction. That was good stuff. So that was 8 minutes.
Well, and hey guys, I got to tell you, I have loved being with you today. It's been short. I'd love to come back and visit with you some more.
Yeah, we'd love to have you again when we have less technical difficulties. So thanks so much for this.
I'm so flexible when it happens, but I love what you're doing with the show. Congratulations, and I'll hope to see you again.
Thanks, man.
Sir.
Yeah, thanks for joining. We'll see you.
You bet.
So he's mirroring, we had Christoph Chu on the show last week. He's mirroring exactly what, just from a different point of view, but exactly what Christoph was saying, you know, and so to hear him say over his career, he's always said that the agent will be the most important part of a transaction. And then to bring in what Christoph said last week, really that, you know, you have to focus less on sales right now, or not on sales at all, and just check on your database. Just check in with people and see how they're doing, you know, and just get rid of the car sales stuff right now. There'll be a time for that, I guess. I don't ever do it, but you know, it's very important right now to check on humans.
There's a good comment from one of our newer viewers. He checked in last week. He was from Belgium. It's Charles Henry van Capellen.
Yeah.
Capellen. That's kind of like my last name with a cap in front of it, I guess.
Yeah.
He said, hi guys, just FYI, here in Belgium, where the crisis is a couple of days in advance of the US, real estate business is completely down. All visits are suspended. You could get a fine if you do visits. So indeed, as suggested, we are reaching out to our database.
Wow.
Very cool. So one of the things, and you know, just to give some folks some practical advice and to tell people what I'm telling my own agents, you can still operate and work as a real estate agent even without any in-person meetings. You just have to get very creative, not in the content you produce, but in how you go about working. So some of the ideas that we were throwing out to our own agents is using something like Zoom, or having your sellers send you pictures and videos of them in their house and creating a listing video that's more like a home video. But using Zoom to interview your sellers and talk to them about what's going on and talk to them about the house that they love and why they're putting it up on the market. So you could still do a lot, especially with electronic signatures. Instead of going out to the houses, there's a lot you could do to get people on the market. And I think personally that it's super important to be listed on the market right now, because if you're not, you have a whole bunch of people that are essentially not going to pick your home. So if you think about how we shop on Amazon, we all do this. We go to Amazon and we like put so many things in our cart. And then as soon as the money comes in or a check is cashed, or we're like, oh, let's buy all these things that I want, right? And you put them in your cart to kind of keep tabs on it. You might save it for later, but for the most part, you're filling your cart and you wait. Well, people are going to be filling their cart and waiting with real estate, right? They're going to be putting your home in their cart and they're going to wait. And as soon as they feel like they have it good to go, as soon as they feel like they could go out, purchase a home, that they're all clear, then those homes that are in their cart are either going to be first to be seen, or they're going to be the first ones purchased. And the ones that are late to the party that still have to get the photos and their home ready and all this other stuff, those homes are still going to be sitting there a couple of weeks later when the inventory is starting to ramp up and now it's more competitive. So now could be a really good time to put your home on the market when inventory is low so people can see it. And I said this, I think Monday, we were visiting with Tom Ferry, Jason Pantana, and Tea DeCarlo. And I said that no other time in history has days on market been as forgivable as right now. So for everyone saying, well, you know, it's going to have 90 days on market by the time everything ramps up. Yeah, but everyone's going to look at it and say, well, they were listed through COVID. Of course they have 90 days on market.
Right. Yeah.
So
I still want to go see that house. Yeah.
There's zero risk for doing this.
Well, if they're not out and about looking, then all of a sudden they poke their heads out whenever our actual spring gets to happen. We get to go outside. And they're going to go, oh, I want to see all these houses. They're not going to care about 90, 100 days on market. They were not in the market then. they weren't looking. They're going to totally, I can guarantee it. And I don't guarantee anything, but I can guarantee they're going to give that forgiveness. Oh, well, they were on the listed through, so if showings were down and whatever, they're going to give that forgiveness for sure. And truth be told, we're still getting a lot of people on our website asking for valuations, wanting to look at properties. I have a buyer's consult scheduled this week. We're still chatting, but we're going to either do it via Zoom or just FaceTime on our phones or whatever, but you can still get in front of people. And Ray, you said it earlier on the show, what we do right now is going to reflect in 30 to 60 days, right?
Yep.
So if you're just sitting around going, it's a vacation, well, you're going to have no business now. And then 30 to 60 days, you're going to start. So you're going to be 120 days behind the curve here. So now's the time to learn a new task, learn a new skill, really get to know technology, like Nick said, and really hunker in, and then still work on, your database and your leads that are out there.
Yep. I don't want this to be a time where people kind of go backwards and then look at it and say, man, I wish I would have. So you really need to make a list of everything that you wish you would have, and then start to going through those things. And Bearded Men of Real Estate, we don't normally get preachy about what you have to do as a real estate agent, but we actually care about you guys who watch the show. So we're a little bit preachy about this because we think that if you do these things, then I think you're going to be massively successful when everything starts to ramp up, and you could have a massive amount of success right now that could save you. So I think it's really important to be attentive to what's going on, be aware of your messaging. This is not a time to say, free toilet paper with the contract. I think people are going to be,
please don't do that
stuff. But if you say something like, hey, if you have to move, I'm still here, and there's ways that we can help you do that, that's going to be very curious for a lot of people. And they're going to say, well, how are you doing that? Like, what's going on? Why can you operate, and how can you sell stuff when other agents are telling me no? I literally am getting a listing today because of that. Another agent said, no, you should wait. And I made the case. I said, well, you could wait. Here's what that would look like. Or you could go on now, and here's what that could look like. And they said, well, we got to sell. Let's try. So I think this could be some good. We don't like the guru thing. We try to avoid the guru thing. We actually make fun of most gurus. But I think this could be some solid time for you to really dig in and get better, because Be More is all about, which we didn't talk about at the top of the show. It's about being more as humans and being more as agents. So,
and right now is very important to be more as a human, and be a human to your clients and to your leads, and let them know that you're there for them. Because honestly, Ray and I've had this conversation. I've had this conversation with Chris Murray, who I don't know who that is. But unfortunately, there is a sentiment that, a lot of agents are just taking time off right now, but we are imploring you to employ anything right now to stay in contact with people and to, learn a new thing, but just be a human and stay in contact with people. It's a very important time right now, because I don't remember, Ray, was it before we got on, or before we were live on either show? But you said it like the pinball, or like the rubber band snapping back, right?
Yeah. Pinball. Yep.
So like, there are a lot of people right now that, it is, first of all, our job, because there's a lot of people that are going, no, I'm not selling, I'm not buying right now. Well, then ask them, well, what's important to you? And do you want to know more about the process, or what's really going on, how we're doing this or that? And maybe they want to know, but even if they're hold, be there with them throughout this process. Because eventually, when we get the all clear, there's going to be a boom, is what I would guess. I would guesstimate there's going to be a boom. And if you haven't been doing the work to check in on your humans, then you're not going to be the beneficiary of that work.
So we may have a surprise guest on the show. I'm going to send them a link in a second and see if they can join us.
Yeah.
But I also wanted to get to a couple of these comments. So we have some good comments. Lisa Perk, who's a fantastic writer, makes an elegant point. She said, give people time to fall in love with your house and dream and move in mentally.
Love that.
Yep. Melissa Mars says, you can't hold days on market against listings at this point. Dusty Martin says it's employee. Howard Broadsley stopped by to say hi. Hey, Howard. Hope all is well with you. And let me send a link real quick to...
Don't say it.
I'm not going to... You don't want me to say it?
No, let's just see if it works first before we don't want to over promise and under deliver.
Yeah, that's true. We
Today
have
has
had
been
some
rough.
technical issues that are pretty stout, I guess you could say.
Howard Broadsley, I am a human. I talk to humans every day, or at least text them.
Yeah. I have an interesting interview with Howard on my YouTube channel, by the way. You should check that out.
Oh, has it been up?
Yep, it's up.
Nice.
So with coming out with Massimo, who's our Italian correspondent.
Yeah. So just so you know, Howard is in Israel. So we got his take 2 weeks ago when we did kind of a happy hour thing.
Yeah.
Last 2 weeks we've had one-on-ones, but he gave his take on what's going on currently. They're on full lockdown. They can't do anything. There is fines, kind of like our Belgium correspondent. So it's very interesting to hear that, but he's still checking on people and still working.
Okay, I hope this is who I think it is. So I'm going to admit it, even though I don't recognize the username here. Yay! It's Frank. It says get Coop out. I was like, oh wait.
But
Hey man, how are you?
Hey man, I'm good. How are you?
I'm good. I think we could hear a little bit of a echo from your computer there. So, yeah, I think you got us going on in the background too. You may have to.
Here. Hold on.
Yep. No worries.
Okay.
I don't mind hearing myself twice.
That'll solve that.
Well, for those of you who don't know, Frank is an industry leader in mortgage lending and in real estate, and a host of the National Real Estate Post with Brian. Right, Brian? We've never met Brian. I've only met you, Frank. So.
Oh, you'll meet him. I'm confident.
So Frank has a little bit of insight on what's happening as far as lending goes and what's happening to the market on the loan side. We've talked, I don't know if you saw the beginning of the show, Frank, but we talked about the forbearance requests increasing 2,000%. We talked about Mr. Cooper already giving it to 86,000 people. And we talked about kind of what that looks like in reality, about how forbearance may be a balloon payment at the end of that term, or it could be added to the end, or it could be refinanced over a year or two. So what do you think this is going to do? Because we also saw a mortgage CEO saying that this is going to wreak havoc because it is what they call it in good faith or something like that, that these people were taking these, the companies were taking these loans and we're paying it back in. I don't know. It basically saying that the whole thing was a mess. So what's your take on this as somebody that is an expert in lending?
Okay, so just to understand, there's been within this crisis, there's been like multiple crises related to it within the mortgage industry. Okay, so the mortgage industry is just like having little nuclear bombs explode like every 72 hours.
Yeah.
One problem causes another problem, And so it kind of started with, the first thing we had was rates dropped through the floor, and then we had a capacity crisis in the mortgage industry, right? We couldn't do them, right? We didn't have enough bandwidth to even come close to processing all the demand. The next kind of little crisis that we had after that was we had products fall apart. Okay, because with COVID, employment became an issue. With the lack of employment, risk becomes more prevailing in the mortgage industry, right? With risky products then fall apart. Okay, so you've got non-QM stuff, if you're all familiar with that. These are, they're not subprime loans, but these are the products where, you got your self-employed guy who has an amazing accountant who shows I don't make anything, right, for taxes, right? But in reality, he does really well. And so with bank statements, you can get that guy a loan on these non-QM products. That went away.
Right.
Jumbo loans, again, jumbo, big equals risk, okay? And they're non-conforming, which means they don't fit into the agency, the government world where they have some sort of a guarantee. So jumbo they took a hit.
Hey, Frank, real quick.
Yeah.
I don't mean to interrupt, but so there are lenders that do only jumbo.
Correct.
Are they just pretty much down to zero right now?
Yeah, man. Most of them are just wiped out. Now, there are still some that are out there, though. There's still some that are out there. You just got to find them, But for the most part, jumbo took a big hit.
Wow.
So we had the product crisis. Even FHA loans became an issue, right? Because of the forbearance thing. Well, why would I invest in a Ginnie Mae stock or bond or whatever? Because, I'm going to put my money there and people are going to get a loan. I'm not going to make a payment. How do I know if I'm ever get things? So that was a crisis. Then another crisis that the mortgage industry went through. And this is just all in like 3 weeks. Okay. All of this is happening in 3 weeks. And then the other crisis is that, these lenders, what they do is they hedge their loans, right? They hedge it in the secondary market. So, they're committed to deliver a certain amount of loans at a certain rate to investors for over a certain period of time, essentially. Well, when the rates went crazy and all that, they were on the hook for huge amounts of money, what they call margin calls. These investors say, well, pay up. We want to get paid up on this because things have changed so much. And so then you have lenders really in peril of going completely out of business just because they had to pay these massive margin calls. I'm sure some did go out of business. That kind of got settled down a little bit because a lot of industry leaders went out there and said, hey, you can't, it was the Fed investing in mortgage bonds that was driving the mortgage bonds to a point where it was just destroying the lenders who could lend. It was wiping out all the loan companies. So that got kind of settled, right? The Fed heard it, kind of rolled back on that. And so now margin calls aren't such a big problem. But here's the new one. The new crisis is servicing. Okay.
Yeah.
Yes.
So when you make your loan payment, you're paying a servicer, right? And that servicer is collecting your principal, your interest, your taxes, and your insurance, your PMI, whatever. And then the servicer collects that money and is obligated to pay the appropriate things to the appropriate sources, like principal and interest goes to the lender who owns the loan. The property taxes go to the county. The insurance goes to the insurance company, right? Well, the deal is these servicers, they're on the hook for that payment, right? They're on the hook for it, whether the consumer pays it or not. Okay. So if the consumer starts going into foreclosure and stops making payments, well, the servicer still has to make those payments to all the appropriate people. That's their obligation. That's part of their risk that they take as being a servicer. Okay. And under normal circumstances where everything's honky-dory, you don't have 8 billion people now trying to go, I don't have to make my mortgage payment, right? It's okay because they got plenty of mortgage payments coming in to deal with the small number of foreclosures that, they have to deal with where they continue to make those payments until the servicer forecloses, right? On the consumer. So now though, we've got, this, hey, don't have to prove that you were affected by the crisis to go into forbearance. Don't have to, provide anything like that. Just if you feel like you've been affected, you can, let's talk to your servicer, see if you can skip some payments or that kind of thing. You guys have already covered, the issues there, right?
Yeah,
it might be all due on the net last month, or it might get spread out or whatever. But beyond that, okay, let alone that issue, the big issue is if you have a massive run on people not paying these servicers, at some point, these servicers, they just don't have the money, right? They can't pay. Right? Everybody that they're supposed to pay, which causes massive problems. So there's some industry leaders that have been stepping up, David Stevens being one of them, that have been stepping up and working with, the government and working with the Treasury and et cetera, to try and say, hey, let's set aside a liquidity structure, right? So let's set aside some money, a liquidity facility that the servicers can kind of draw from while these people are in forbearance, right? So where they're not collecting money from the people, they're still on the hook to pay all this stuff. They can draw, if they find themselves in a pinch, they can draw from this liquidity facility, right? To kind of, till things shake out, right? They make things cool. Okay, well, the head of the FHFA, Mark Calabria, right, is basically come out yesterday or whatever, saying, nah, we're not interested. We don't believe that this is going to be that big of a deal. Okay, we're not going to do anything like this. Okay, so it's going to be a massive, massive problem in the mortgage industry if it doesn't get resolved. Now, here's the good news. It seems like we're having a crisis and solving a crisis within 72 hours. You know what I mean?
That is true. Everything seems
right
to be going very, very fast with solutions.
Yeah.
I have noticed that.
Yeah, so, but who knows? This could drag on. This could take time. End of the bottom line for our real estate viewers, for our consumer viewers, for our, mortgage viewers, if this does continue to develop in a negative way, there are going to be other massive problems in the mortgage industry that could potentially, again, just wipe mortgage companies out, making it very difficult in the lending realm going forward. So that's our latest crisis in the mortgage industry. We've had 6 or 7 in the past 3 weeks, but this is the latest one.
Yeah. What's next?
I tell you what, if you're in the mortgage industry, this is painful. But if you're in the mortgage content industry, this is unending. I mean, there's so much to talk about
every day
to release. Yeah.
And that's why the lives like you guys do are so important, because it's a crisis this second. It might be solved by tomorrow morning. You know what I mean? So something else happens, because things are happening so fast. That's why the lives are great, because this is real time right now. This is where we are. So anyway.
And Ray and I are both fans of video, and I always go live obviously on the show every Wednesday at 10 a.m. my time, 1 p.m. on the Cheese Toast. Sorry, we got to get a plug in there, but I try to go live one other time during the week. During this time, it's been, hey, I just want to check on you, the individual. But also there's a lot of real estate in there and what's really going on and stuff, and it's really cool to be able to do it live. Right now, I'm on my computer pushing in numbers. But David has a really good question for Frank. Put him on the spot a little bit. What are the odds the dollar crashes and goes away?
That's above my pay grade. So I don't know. I don't know what those odds would be. And I always kid around with Brian. We're all looking to make it. It's like, did it? We made it. I said, this is going to be our deal. One of these days we're going to be able to sell everything we do and stick a bunch of money in the bank, and the dollar's going to just get decimated, and we'll just be right back where we started.
Right. Hey, we did it. Oh.
Yeah, but no, to answer his question, I'm sorry, I don't know. I'm just again, that's above my pay grade.
He did also ask about HOAs.
Yeah.
That brings up an interesting point. You have HOAs and all the taxes and everything that are supposed to be paid out of people's mortgage payments, and all that stuff is not going to get paid either, right?
Well, think about this one. So think about the home owner, the investment property owner that owns a home that has renters in. So let's say they pay $1,500 a month for their loan or for their mortgage, and then the HOA is another $300, round numbers, right? But let's say they can only get $1,700 a month for rent, but they're willing to take that loss for the long-term benefits of owning a second home, right? Think about those people that now, not only do they they're not used to the entire payment plus the HOA. Now they have to take that entire $1,700 or $1,800, and then the HOA is not getting paid as well as the servicer is not getting paid. So it could, that's a great question by David.
Escrow.
It's going to be a problem. Yeah, it already is, I'm sure, for a lot of people. And to answer your question, Ray, the servicers are obligated to pay those taxes and insurance no matter what, if they're not collecting the money from the borrower or not. So they're obligated to do that. The problem is going to come into, they only got so much money, right?
Well, that's where.
If too many people are not making their payment, it's going to be a problem. Somebody else is going to have to step in. Now, FHFA is saying, well, maybe we'll take over servicing. It's like, right, okay, FHFA is going to take over servicing of 40% of the freaking
overnight, by
industry.
The way.
Yeah, overnight, you're going to take on servicing now. I mean,
not a good idea.
Come on.
Yeah. Well, I mean, I guess they could just add on some staff that's laid off from other servicers, but they'd have to do it very quickly.
Congratulations, you work for Fannie Freddie now.
Yeah. Literally, you don't have a job. Oh, you do again.
Yeah.
Pull some of those Redfin agents and they can take care of that too, right?
Yeah, there you go. Yeah. So anyway.
Well, that's very interesting. Thanks for coming on the show and giving us an update on that. I've been talking to a lot of my lenders on the daily and like, hey, what's going on now? I had one of them text me, I guess it was a couple of weeks ago on a Friday night. And he was like, hey, HUD just released this new statement. They're changing some of the requirements, and was telling me about the requirements on a Friday night at like 10 p.m. So I know lenders are working overtime trying to figure this stuff out. So I appreciate you coming on the show and letting us know kind of what's going on, because that's valuable info.
With a hot take, man, right there. Hot take. Love it.
For for the realtors, just to kind of dovetail on what Ray said, understand that your lenders have just like this crazy, insane stuff going on behind the scenes that you just don't even see.
Yeah.
That's like just the most crazy thing in the world. So don't be shocked when, you know, your lender gives you a call and says, yeah, we got a little issue here. I mean, just don't be alarmed.
Yeah,
Cool.
I've been fortunate enough to get mine through and closed, but now it's, you know, everything's on hold-ish, kind of.
Good. Yeah.
So before you go, Frank, tell everybody where they can find you, man.
Oh, okay. Yeah, you can visit us at thenationalrealestatepost.com, or to make it easy, NREPdaily.com, National Real Estate Post, NREPdaily.com. You go there, big orange subscribe button, and you can subscribe there. And by the way, the National Real Estate Post is being completely redone. We're going to be the place to start your day every day. All real estate news and mortgage news will be on the homepage, including this show.
Yay!
Oh, wow.
The bearded men of real estate.
Yeah. That's right.
Big announcement coming up, guys. Oh, wait, it already happened.
Yeah. So everybody will be there. Everything will be there. And so, yeah, if you can visit the site and sign up, that'd be great. Or just subscribe. It's all free, of course.
Yeah. Thanks, man. Well, thanks for coming on the show. We look forward to the revamp too. So that's exciting.
Appreciate you guys.
Congrats.
You guys are awesome. And thanks for bringing me on, and I'll catch you later.
All right, man.
Thank you, sir.
I'll see you.
Bye.
Cool.
More awesomeness, dude. A surprise guest
There you go.
today. We've turned it into a talk show.
I'm gonna have to redo the thumbnail for this one and add him in the thumbnail. Maybe put him like real small somewhere like that.
I know. You got to have your assistant, by the way, total non-related for our viewers, but you got to have your assistant going. I've been moving to try to get the scale right, throughout the show with Nick on and then with Frank on. So she's got to find one where we're
She's got to find all the little pieces. So
these are the things that go through our minds when we're doing this show live. We're not only thinking about what your answers are, but we're trying to produce a show and look good for this and that. Yeah.
These are important. Well, I hope instead of putting the headlines up like we were doing, this time in the show, I guess I have 2 picks of the week. Do we have time for 2 picks of the week? Maybe Maybe we should do 2 picks of the week. We'll see. Are there people still watching? Yeah, people still watching. Melissa, she's still commenting. So people are still here. Okay, good. So I'll do 2 picks of the week real quick. And my first one is this thing right here that I'm using. If you are trying to produce a show, you should take a look at this. It's the ATEM Mini, ATEM Mini. And this is what has allowed me to display the contents of right now what my Facebook page is. So I can fade in and out. That's my Facebook page background currently. But we were having the news articles and stuff like that up, and then I could switch between me. So anytime that you heard Dan, you were actually looking at my screen when we were able to show this. So we could show the actual articles instead of just bringing up a headline. So it's a pretty cool little tool. I got a whole bunch of inputs that we could play with on it too. So
yeah, and truth be told, I said, Ray, we got to do something. When I'm talking, we got to get my face off the screen. So
that's not what he said.
Well,
he said,
I noticed that
we'd be able to see me a little bit because I want them to see my pretty face. That's what he said.
Right. That may be what I really said.
So yeah, there are people. Lisa Perks here, Sarah Anderson. Okay, good. Second pick of the week. Are you ready for this?
Yes.
So this is what you guys should get. You see this?
Case.
Mm-hmm. Mm-hmm.
Ooh, something in the case. Ooh,
Yeah.
Wait, let me guess.
Yep.
That's 360, isn't it?
Yeah, this is the Ricoh Theta V.
Nice.
It's one of the least expensive, high quality 360 cameras that are currently available on the market. If you don't have one of these as a real estate agent, I hope you know that now why you need one. So doing virtual tours has never been easier. Taking pictures and sending them to your clients so that they could get a 360 view of a place has never been easier. So get this, and you'll also need a long tripod, which I could show you next week. But it's the Ricoh Theta V. Very, 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 very cool. So I got 2 picks of the week for you.
So, and as you go through, so you can go back and edit the focal point, right? So if you walked through a home 360 wise, right? You got all your gear on and you walk through a home, you can, as you walk through, you can go back and edit and have them, their eye view go through the house in different places, right?
Yeah, there's a couple of different ways to do it. You can edit it as a video, and you can basically walk through slowly in a home and then move the camera view around the house as you're editing the video. Or I think maybe an easier way that, I don't know which way takes longer, but you could just take still shots and stitch them together with a program like
Oh,
Matterport.
cool.
right? So Matterport can then guide them, and they can use, I find that people if they want to take a home tour, then first they don't want to see your photos because they've already seen those. So if they want to do a home tour, they want like a whole 360 tour, and they want to be able to gauge that speed themselves. So they want to be able to go back into that room and look into that closet and look over there in the bed. So because of that motion and the freedom that they want, it's probably better if you're going to do 360 tours to do one that is not automatically controlled by the creator and have it be controlled by the viewer. So I like the still shots where people can guide themselves through the home and look at each individually.
Then it becomes like Google Street View where, oh wait, I want to go back. And you just click on that little angle.
So Brad Daniels says Insta 360X. I do not have the Insta 360X. I actually went with the Ricoh Theta because I liked it. I liked the quality better when I was looking at other YouTubers and what they were doing and how they were using it. I preferred this quality. So there are some people that really like the Insta 360X. If I got an Insta 360, I'd probably have to get the Insta 360 Action, which I think is a little more expensive. It's with like 2 GoPros. Kind of does.
But I mean, think about how impactful that little device is right there, right now. Go walk through a house, upload it to your MLS, your listing, or just send it to clients one-off when they want to see the house, whatever. Just that one little tool right now can help you get through, this difficult time.
They also have a Ricoh Theta X1 or something. It's like $1,000. This one is like $350.
The Sarah Anderson. Sarah with an H, by the way. She wants to know cost.
Yeah, 350-ish. Then the stand is another maybe $100 to get you want a real thin tripod that does split at the bottom. You don't want a monopod. It's got to be a tripod, but the split has to be at the bottom, and it'll edit itself out, which is kind of cool.
It does. I've seen them do that. A buddy has one, and as he goes and shows off, he holds it up on his selfie stick, and it edits the stick and him out.
You could get a kit that comes with like a little selfie stick and some other stuff, some other plugs and all that. But pretty simple to use too. So it's fun.
Yeah. And then
Brad Daniels said the videos are quicker to produce, but the tours with photos are still easier to control. Yeah, I agree.
Okay. So that's a cool point. For an ish for the 1X without accessories. And Melissa has an awesome comment. Did you see that one?
Let me go up. She said, my pick of the week is Callie for sending us Jersey folks another 100 ventilators to use. Oh,
yeah.
That's sweet.
Welcome.
It's true.
The cool story is behind the headline is I actually sent 42 of those myself personally.
Yeah.
I am the representative Californian.
Yeah.
Just kidding.
Dan. Look how humble Dan is.
Yeah. Just kidding.
That's exactly what not to do, philanthropists.
All right. That was that's how you do not pull off some philanthropy.
Well, thanks everybody for joining the show. And we do apologize for the technical difficulties in the beginning. I think this will kickstart a way for us to find a different platform to use other than BeLive. I know everyone is experiencing some difficulties, but that was ridiculous. So thanks so much for being patient with us. It really means a lot to us. It means a lot to us for you guys to reshare it once we went live again. So we really, really appreciate it. We appreciate the support. And hopefully we'll get Nick Bailey back again when he has more time, because that dude was a stud. So,
well, yeah, we had a whole hour scheduled with him. So we budgeted for 10, 15 minutes through the news stories, which we got through fairly quick, but then we're like, here, Nick, do everything in 12 minutes.
All right. Well, and I totally misunderstood. I thought his heart out was at 2, but I think he thought I was on the East Coast. So that makes sense why when I went to him, he was like, I got 8 minutes. I was like, oh, dang, I thought he had an hour and 8 minutes. So our bad for that, but we will reschedule Nick. That guy had a wealth of information, and
just
I can't wait to have him back on the show.
Yeah.
All right, guys.
Very
thanks for joining us. Dan, why don't you tell everybody where they can find you?
D Ludwig Rocks. Ray can't put it up on the screen right now, but DLUDWIGROCKS. Everywhere. Go find me. Go find me on Insta. I'm trying to do fun stuff on Insta. And then I am on TikTok, but that's different. I'm doing dumb dances on TikTok.
Yeah, you should definitely go find his dumb dances on TikTok. What is your name? Is it Dan Revolution, which I told you it should be?
The actual name, so it's under D Ludwig Rocks, but the actual name is Dan Revolution.
Yes. Okay, and you can find me at Rayzorback. That's RAYZORBACK on Instagram. I'm also trying to put more content and do some cool stuff on there, so I appreciate the follow. And thanks so much again for sharing the show. This should be on YouTube like in an hour and a half or so. So we're trying to do that a little faster for you guys too, so you can reshare. So thanks for joining us, and we will see you next time. Bye.
We love you guys so much. Truly, stay safe out there, please. Bye.
I don't know if it just stopped or not.
Yeah, it still says recording, so who knows?
I know we're recording.